Welcome back. Time now for some business news. In line with recent central bank policy shifts aimed at lowering lending rates, the Cooperative Bank of Kenya has announced a 200 basis point reduction in its base lending rate, becoming the first bank to respond with a significant rate cut following central bank's directive last week. Now, according to the bank, the adjustment takes effect immediately and is intended to stimulate credit growth, particularly among micro, small and medium-sized enterprises, which it considers pivotal to the country's economic development. Jimmy Mbogo has the details.
Any bank that has not passed on the benefits of reduced cost of funds to reduce their lending rates to the private sector will be penalized in accordance with the law.
This warning from the central bank governor has sent shockwaves across the banking industry, prompting lenders to move swiftly to lower their rates. Following the central bank's directive, Cooperative Bank has announced a 2% cut in its lending rate. The bank's effective lending rate now stands at a base rate of 14.5% per annum from 16.5%, with an additional margin ranging from 0 to 4% per annum, depending on individual credit profiles. In a statement by the group CEO, Dr. Gideon Muriuki, the lender states that this approach will ensure that borrowers with strong credit histories can access more favorable loan terms, encouraging prudent financial behavior. Cooperative Bank's decision follows concerns raised by the Central Bank of Kenya regarding the delay in translating lower policy rates into lower borrowing costs for consumer. CBK has lowered the base lending rate by 225 basis points between August 2024 and February 2025. The CBK has been urging commercial banks to follow suit or face regulatory actions.
The banks have given the explanation that they are having to offer high deposit rates so as to be competitive with their depositors who can access the treasury bills. But I think by now there must have been deposits that are maturing since we started to lower the CBR. And if we just follow the risk-based credit pricing model, there is no reason why the lending rates to the private sector should not come down.
On February 5th, 2025, the central bank lowered its benchmark rate by 50 basis points to 10.75% in its fourth consecutive cut in a bid to boost lending rate and stimulate the economy. The regulator also reduced the cash reserve ratio by 100 basis points to 3.25% and launched physical inspection to investigate why banks were not passing on the benefits of lower financing costs to borrowers. Cooperative Bank's rate reduction is expected to trigger a wave of similar moves across the banking sector as more banks rush to align with the CBK directive, a development that will ultimately benefit consumers with lower borrowing costs. Jimmy Mbogo, Citizen TV, Nairobi.